Guys, welcome to the first lesson on trading using the bomber divergence strategy. In this lesson, I will introduce you to this system in more detail and show its potential so you understand what to expect from this system. So, the bomber divergence is primarily a technical indicator that operates on an all-inclusive principle. In this indicator, I have included more than 5 different technical indicators. One indicator calculates statistics, another identifies divergences, and a third determines the trend direction. In general, each indicator within this system has its clearly defined due task. And all of this is compiled together into one indicator. It is called the bomber divergence. Plus, there is also a utility that helps, the trader trade. That is, you can make buy and sell trades through the trading panel and close these trades with a single keystroke. And this utility also automatically sets stop loss and take profit levels. It also closes trades according to the conditions of this strategy when the divergence is resolved. So, regarding divergence, what is divergence in general? This strategy, the bomber divergence, operates based on a trading system on divergences of the MACD indicator. So, in general, you probably know what indicators are. What are technical indicators? They analyze the price chart. And if you look closely, the indicator generally mirrors the price movement dynamics. The price jumps up, the indicator also rises. Here's the line, right? The price goes down, the indicator also goes down. We see that the price moves in waves, and here we have 2 local minima. Here's one minimum, here's the second minimum. The indicator draws the same minima, but if we look closely, here the first minimum is higher than the second on the price chart, while on the indicator scale, the line shows that the first bottom minimum is much lower than the second. Yes? If we draw a line between the 2 minima, it will be descending, and here it's ascending. This is called divergence. I won't delve into the deep theory of what divergences are and the types. There are bearish, bullish divergences and hidden divergences. No, this essentially doesn't matter right now because we are talking about practice. And the indicator will determine the divergence. You don't need to know exactly 100% how it works, how to distinguish divergences. That's why you bought this system. Because the indicator will do all this for you. And as statistics show, it does this very well. So it finds such divergences and gives us trading signals that a divergence has occurred. For instance, we have differences here between the dynamics of the indicator's movement and the price movement dynamics. This divergence occurs, and according to Bo practice, precisely based on statistics. After the divergence occurs, the quotes begin to resolve this divergence, and the dynamics between the indicator's movement and the price become more or less similar to each other. For example, we have a divergence here. The indicator gave us a trading signal, and the quotes indeed started to rise. Let's look, for instance, divergences occurred here on, bearish divergences, meaning divergences for a decrease. They appeared here, and the quotes went down. There were also bearish divergences here, and the quotes went down. In this way, the indicator finds such differences between the price chart and the indicator, the MACD line, and shows us trading signals. I'll show you the situation once more. Let's take this. Here we have a local minimum, and the indicator also shows a local minimum. And here, a local minimum arises. And here the indicator also shows us a local minimum. After it determines that this is a divergence, the indicator identifies it, recognizes this pattern as a divergence, and gives us an arrow, a trading signal like this. Here it appeared in this place. and says, hey, trader, I've identified a divergence. Let's trade upwards because the price will rise. Here it is, the divergence. Come on, dear, let's trade. And I go to the utility and press buy at this moment when the signal appears. Or I open my mobile platform on my phone and also press the buy button. I get a trade that the utility picks up and it sets, for example, the stop loss level at this point and the take profit level somewhere at this point. There you go. This is our market entry level right here. And then the indicator. And then the utility, besides setting the take profit and stop loss, also tracks the dynamics of the MACD indicator line movement. And so the trigger will be such that the trade will close when the divergence is extinguished, when the line on the MACD indicator reaches its zero level. That is, the potential for price movement is already decreasing to zero. This level is, as it were, the first level to say that the divergence has already reached some sort of peak. Here, the potential for price movement was small, and we earned, roughly speaking, only about 258 pips. Here, there are great potentials for movement. Here, on the price chart, of course, there can be various situations. We are only talking about one price chart here. Here, we only earned 1,692 pips. On this price chart, our profit factor was 2.54. This indicates that our profits are 2.5 times greater than our losses. And we had 9 profitable signals and 2 losing ones. Here, we earned this amount of pips and lost this amount of pips. The difference is 1,692 pips. This is one price chart. We can use this indicator on practically any asset. I use it mostly on currency pairs, but in reality, this system can work on literally any asset. Look here, I have this many currency pairs for use, this many on these many assets. I trade using the divergence bomber system. In the video presentation, I demonstrated, meaning the video that preceded this one, I showed how much this system earns. I won't show it in every video, because people might say it's boasting or some kind of scam. I want everything to proceed in order. We will return to profitability later, but now I will continue to show the potential of this system. So let's return to the first asset and move on to the second. Here we have a price chart where the indicator also works. Here it identifies, I'll show you once more. It identified one peak on the price chart here and a second peak. And our indicator also shows 2 peaks. The first peak and that second peak. A divergence arises between them. The indicator says, my dear trader, I have identified a divergence. Let's trade downwards because the market will now extinguish this divergence. And indeed, since that moment, a few more candles appeared and the market extinguished this divergence. Here we earned about 50 points. If we zoom in, we see that the indicator independently calculates the difference in points between the opening price, WA, and the closing price. Here we have 502 pips. And the overall cumulative statistics are displayed in a separate window. Here we see that there are 14 profitable trades and 2 losing ones, and the profit factor is more than 9. That is, the profits are 9 times greater than the losses. Just so you understand, this system is not the Holy Grail, and there are no tricks here. That is, it's not about fitting to the story actually. And I will show you that this indicator also makes mistakes. So, for example, if we take this peak and this peak, look, you see, our indicator shows that a divergence has appeared between the two peaks. Here it is higher, here it is lower. On the chart, on the indicator scale, it's the opposite. Here it's lower, here it's higher. So we have a divergence here. The indicator says, let's trade downwards. Everything will decrease here. We make a trade right here, and the price goes up, it rises. And somewhere here, that the stop loss will work. Or if this stop loss was higher, for example, it was here, we of course will not get a loss, but, well, let's say we'll sit it out a little bit. There will be a little bit of a trading drawdown, but it won't reach the stop loss. We won't lose money. There will just be a slight trading drawdown. So here the quotes, instead of decreasing, started to rise. And such losing trades are noted separately, indicating that there is a loss of 504 pips from 2 trades. The indicator shows us when such a divergence is extinguished, like here it was extinguished, when the line on the oscillator scale reached the 0 level. This trade, this divergence is considered extinguished. And according to this strategy, we should close this trade. And the utility executes this signal of the line touching the 0 scale of the oscillator and will close this trade with any result, whether at a loss or a profit. Therefore, we have 2 rules for closing losing trades. Either when the physical order stop loss is hit, or when the conditions for closing this system, this trade at the 0 level, are met. The utility will handle this, accompanying each trade if the conditions for closing are met. We will not wait, and perhaps the price would have gone further. Why close this trade so high at the stop loss when it can be closed here with a small loss? This is what the utility will do. In this way, overall, our statistics will be approximately like this. There will be profitable and unprofitable trades, and we will continue to move forward. There is a profitable one here with a small profit. Here is a profitable trade with a more or less good profit. Why don't we close trades much? Here is the potential. You might say, listen, you got a signal here and the closure is here. Why don't you hold the trades all the way up to here? Of course, here, let's say there would be 2,000 pips. Well, even 5,000 pips. Guys, it's all because, well, first of all, it's impossible to take everything from the market. And secondly, look, there are situations like this. You see, this trade, which I showed earlier, essentially closed at the very, at the very bottom. And where to hold further? If we hold further, then this trade will eventually turn into a loss. But this way, we closed at the level where it really needed to be closed. Right here, on the line, at the level of consolidation, already at the very bottom, the local bottom of this wave. Let's move on. The next asset. We have exactly the same situation. There are trades. Divergences are identified. The indicator shows trades. We perform trading operations according to these trades, and the indicator shows us where to open these trades, where these trades should be closed. But we open trades manually, independently based on the indicator signals. The utility picks them up and closes them automatically, or they will close by a stop loss order. Suppose if they hadn't closed here, they would have closed here by a stop loss order somewhere. For example, this level would be here. There you go. Overall, we have situations where, yes, the trend is going down, but we have such deep pullbacks, and here the price constantly, well, here divergences arise, the price touches the 0 level. These divergences are extinguished even before the moment when the trend continues downward, for example. And we profited here, profited here, profited here, profited here. Yes, it seems like the trend is declining, but on these small pullbacks, we are constantly making profit. There you go. And so it turns out that we have here, 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 and here, and here a lot of moments where we make new trades according to the indicator. Here we have 12 profitable trades, 1 loss, and a profit factor of 21. This means that profitable trades are 21 times more. More precisely, profitable points are 21 times more than we net losing points. You can recalculate that if you divide 3,555 by 163, we get 21, almost 22 as the profit factor. Let's move on. Here we have the Canadian dollar against the Swiss franc. And here we also have many options where we could make a profit because we have a lot of divergences occurring as the trend moves, or for instance, when the trend is flat, all of this can turn into profit points in your trading account. Thus, I can essentially open for you any asset that there is in our trading platform, and I can say that on most of these assets, now it's currency. I use currency pairs, although you can open, make a show all here. And here, on my broker's platform, on the MT5 platform, I have about 1,000 assets on which I can trade using Divergence. In this way, you roughly understand the potential of this trading system. In the previous video, in the demonstration video, I showed its profitability. It really is like that. Currently, extraordinary circumstances are occurring in the market. After Trump's announcement, the president of the USA, of new tariffs on customs duties, the market is in a trend, a very strong one. But even in this trend, we essentially, for now, don't see any desperately foolish signals. There was a divergence, for example, here for a decrease, the market is falling and the indicator doesn't show any more divergences because the oscillator line has completely gone beyond the analysis scale. When it returns back up, let's say to this level, for example here, it will indicate that the market is recovering, and then it will be possible to trade upwards, but for now, only downwards and downwards, and the indicator scale has completely gone beyond the limits. If we had a trade for an increase here, we would close it either at break even or with a stop loss somewhere. Let's say at this level. That is, we wouldn't accumulate a loss in the trading account. Let's look here. This is what I was talking about. The line returned to the Zapata analysis area, and the indicator shows us that a divergence has occurred. The divergence occurred right here. We have a local minimum here and a local minimum all here. And they differ from each other. Here the slope is upwards, here the slope is downwards. But overall, this is a bullish divergence. And the bulls in the market are starting to prevail. That is, after the wave of decline, we have a wave of growth. It has just begun, and possibly, well, most likely, it will move to some level of resistance here. But this is already technical analysis. And from the perspective of offsetting on the indicator scale, this divergence will be offset. And the utility will close the signal after the indicator touches this central zero line. This will, let's say, happen somewhere around here. In this way, we will earn about 500 points on this divergence. I think you will agree here that based on some minimal technical analysis, which even a school student can conduct, we have an overall upward trend And the indicator has given us a clear signal, a very good signal for a price increase. And if I make a buy trade here, the utility will close it with a profit after some time. I think there's no point in continuing the review on each asset. Here I'll just click through different assets for you to see. For example, I wanted to show you the indicator for the pound against the Austrian dollar. On one quote chart, it gave us 31 profit signals and 9 loss signals. And the loss from these 9 signals was much less than the profits. We have a difference of 12,000 pips. The profit factor is greater than 2. This indicates that the profits are almost 2.5 times greater than the losses. We can continue with each currency pair. I will show you. Here, look. A downward divergence has appeared. There are 2 arrows here, indicating that the indicator has decreased by 2 levels, and this is where we will close the trade. Well, approximately like this. If you calculate based on the price movement, it will be somewhere around here. From the first level, we will have 989 pips of profit. And here you can see how beautifully the divergences were resolved. A divergence appeared here. Here the quotes reach the 0 level on the MACD indicator scale. Profit, profit. Here is profit. Here is profit. Here is profit. Here is profit. And so we will go through the entire price chart, and almost everywhere we will have profit. 17 trades in profit, 2 at a loss. Guys, this is awesome. This is my favorite system. I've kept it for a long time without publishing, but I want to publish it now so that those of you who like my work, what I publish, my strategies, can appreciate this system properly. With my previous strategies, I kind of showed how many different good strategies I have. This strategy will serve as confirmation that I'm not doing nonsense. My systems are not a scam, and they really earn profit. And you can see that this indicator really works very well. And this system, in good hands, if you follow money management rules, if you set a safe trading mode, use stop loss, because different situations can occur. Perhaps there, the indicator might give you someday show a silly divergence that arises in the wrong place. This is an indicator. It doesn't have a human eye. It performs technical analysis. And from a technical point of view, the market might not be in an oversold stage, and the price may continue to move up for some time. You might say, what nonsense is this? How can an indicator show such nonsense? But technical analysis is different from the human eye. And from the perspective of technical analysis, the indicator shows us one thing, but the market continues its movement. Let's say there will be a divergence here. It will move up, and somewhere here, a stop loss will be triggered. You will incur some loss, and you might say, this is crap, not a strategy. Well, excuse my language. I will try not to use bad words. But in reality, if you take all the signals from this indicator as a whole, then of course we see that there are 3 loss signals on this price chart, but 24 profit signals. And overall, the system will prove that it is not a bad system. Which one of you two? Perhaps the trader was bad because he simply did not follow the money management rules in order to make a quick profit. He might have risked almost all his capital to trade on this silly divergence. Follow the money management rules. Trust the tools that will manage your capital, and your statistics will be approximately the same as those shown by this indicator for each asset. And overall, you will earn very, very well. That's all. This theoretical lesson on demonstrating the potential of this system is concluded. And further, I invite you to continue this training on this system, move on to my next videos, and get this software from me and learn to trade with this system and become richer every day. That's all. See you in the next video. Goodbye.